Good afternoon, everyone. BC Richfield here, coming to you live from London. We have just gone literally 1 minute past midday, making it just gone midday UTC. Big shout out to everybody that's making the stream live today, and an extra shout out and definitely a merit badge for you if you've made all 4 consecutive this week. So I thought, obviously, we've been covering just a random selection of trades that we discovered at the beginning of the week, with a focus on Anchor, ANKR, BNB, Algo. Obviously, we've always got an eye on Bitcoin as well. GOT, good morning, my friend. And 2PGG, our friend with the funky Frenchie in the logo. I do love that, man. I think that's quality. So many Frenchie-loving friends that would go mad for that. How are we all doing this morning, everyone? Good? Seeing Bitcoin continue to rip. Seeing equity markets up, seeing the DXY up today, seeing some alts go absolutely mental. It's a good time, isn't it? And I'm thinking of a dear friend of mine called Menno, who got my eyes on a coin called DMTR, and just that thing has just been absolutely going off, as have a number of the calls that we've been making over at the Nest. The trading team have been doing exceptionally well. And especially with Congress coming up, what a great time for all of this to be kicking off. So last year, funny enough, when we ran our Congress event, marked the bottom of the bear market. So if we just go back on the daily here, actually, we can see it's actually quite unbelievable. But this here is here that we had Congress last year, right? So what a lovely run that we went on since then. And we're hoping again that we've got some similar kind of energy to bring to the market, and, you know, the team and Burb and everyone, even myself, you know, more of an intraday trader. So I do long-term hold positions and that, but my speciality really is just going intraday, playing liquidity pool to liquidity pool. So it's quite funny sometimes, like when we posted our bearish wins on those setups the other day. Wonderful, by the way, to see a few of you guys sharing those setups that you took. And so proud of everyone that did. Not saying it was because of me, but it's just lovely to see people that really, really want to work hard and want to learn, and then have that gumption and that ability to go and execute, because that's what trading is all about. So today I thought, unless people have any specific requests, Papa Legba, Marcelo, hello, my friends, and welcome. I don't know if anybody has any specific requests for coins they'd like me to take a look at. Probably going to be quite tricky to look at entries and bits and pieces today. So I thought what might be an interesting piece to do is looking at how we get these entries in markets that are running really hot. So Cuba, good morning, my friend. And our wonderful Erica, hello, right back at you, legend. So for those of you that are aware of how we trade, or how I trade, my principles on the market are that we're moving from liquidity to liquidity, right? We want to be on the right side of where big players, institutions are getting involved in the market. And you're absolutely right, Cuba. I do want to join the Congress this year. I might even do a few live shows. So for those of you who don't know, QBS is our legendary graphic designer, and one hell of a sneaky little trader as well, and gem hunter, always dropping the alpha, but he's hugely responsible for putting Congress together, all of the beautiful graphics and bits and pieces, and also giveaways and stuff. So stay on Cuba's good side. It always pays. So I'm looking for price to go from external liquidity to internal liquidity, internal to external, right? So what does that mean? It means that in a situation just like this one, which stands out really clear and obvious, we've had these equal lows, which were also external range liquidity, right? So our highs and lows, these are external range liquidity. So the theory is that if we take external range liquidity, then we move to internal range liquidity, right? So this being our dealing range here, right? Because this high was swept, and then this low took liquidity from under here, but also here. So this here would be our dealing range. So what we do is we're going to take it from this high across to here, right? And then I just change that to our premium discount, and we can see this. So we want to be favoring short setups from the red box, long setups from the green box, right? Once we've established our range, highs and lows have been swept, so this becomes our dealing range. Price has run the low, so the expectation is for it to draw higher to fill this inefficiency, the fair value gap, before selling lower, ultimately taking out these equal lows here before then moving higher. Now, When this can get quite tricky, especially on the higher time frame, is like we've got at the moment. So those of you that will know, in terms of my bias, it's obviously bullish. However, when we got to this area, we started to come into this fair value gap on a weekly scale, marked out the liquidity cluster, which is my belief this is where price is heading for in the short term. Then right here, this is where I expected a correction lower, right? Because we had this huge move up. The market likes to pull these orders. We get this consolidation here, often likes to run the bottom of these, and then it moves higher, continuing the trend. So we didn't get that, but we still managed to get some trades because we stuck to our bias, right? Now, people sometimes think that I'm absolutely mental shorting these. But for me, it's different. I'm not shorting the daily chart. Obviously, I'm not shorting the daily chart. What I'm looking for here on the daily chart is for price to come down here to give better buying opportunities, right? So what I wanted to cover today is what happens when we don't get them. So look at this cluster. I've had this on my chart now here since we confirmed this fair value gap on the 25th of October, right? So what people need to realize is you've always got to be prepared and have plans for both ways, right? That means that you can't just sit there and say, right, if we get this move down, I'm a buyer here and then I'm moving up. What if that doesn't happen? What areas are we looking at? What's given us the ability to take these trades? And what gives us the ability to take trades when we start to trend? Now, there's an argument that it's very tricky because you don't always know when price is actually trending or not, right? So what you can do is I quite like to then zoom out, go to a higher time frame, right? And once again, we can see the same principles here. Now, this is a daily liquidity cluster, so it won't make much sense on there. However, we can see one of the really important things that we had here that really confirmed our bearish bias is when we created this balanced price range, right, which is an inverse fair value gap. Price took liquidity from the highs, closed underneath this. Then our initial targets were here and here. Ultimately, it was just a real big cascade lower. Then again, what really started to confirm the bottom here for me was this. Exactly the same. Balanced price range, that's a bearish fair value gap being conquered by a bullish fair value gap, right? This, first of all, when we close above it, becomes an inverse fair value gap. If the candle that closes above it, or if there's a fair value gap covering this one, that's really where we're looking to build our base of strength from and trade it higher. Obviously, our green line is our key support and resistance level. And then we had a very similar situation here, except we can see with this one, right? This actually here wasn't a balanced price range because this happened afterwards. The expansion happened afterwards. This was an inverse fair value gap. But again, we've taken liquidities from the low. Expectation is for price to come back to internal liquidity and trade lower. Ultimately, it did do that. We can see we came up into here before trading back down and taking out these lows. But then price had this bullish reaction, climbed back within this area, right? Then when we violated the equilibrium, which is the 50% line, we're then saying, okay, maybe something... this is too bullish, right? If this should be rejecting price and forcing it into these lows, if it's a short rejection, and then it finds strength, that's when we look to get involved, right? So with that in mind, you have your initial targets. We obviously had that here. We had our target up here as well, which was the high. Then the assumption was you come above this, that it's getting drawn up into this weekly fair value gap. Then when we go on to the daily, we can see this. So sometimes when you really zoom out, it gives you a lot more perspective because now when we zoom back in, and bearing in mind we're zooming into a daily, yeah, we can see what happened here. This is when we closed above, and it's given us all of this lovely upside action. So how can we get involved with these? And just before I go into that, let me just have a quick look at some of the questions. Mark Anthony, what is the next resistance after 40k? Or after 40k, my friend? I'd probably just about be looking at this, right? Which is, I know, 40,068, right? And the reason for that is because of the liquidity that's resting back here. So let me nip back here for you and I'll show you what I'm going on about. So, start of liquidity cluster, right? Or for any ICT traders, they will know this as LR, low resistance liquidity run, right? It's made up of this high, this high, this high, this high, this high, this high. It works all the way up. So why is that the case? Well, quite simply because they haven't been run. Yeah. What you'll notice is when these are left in the same way that these were left here, right, on the way up. Yeah. So price came into that, didn't run it, didn't run that, didn't run that, didn't run that, didn't run this, right? What you end up creating here is this big liquidity pool. right? Because there's stop losses under here, right? So then when price does reverse, you find that it attacks these levels quite aggressively, right? Because that's where institutional buyers and sellers, right, are going to want to put positions and open positions because they can get filled in the opposite direction, right? So it's a kind of reversal trading. However, so that's what I'd be looking at there. In terms of that, you can always zoom out a little bit more. There's obviously a key order blocks in here. I know this is a very large one, right? Because they're all consistently adjoined candles, but all these up candles here that led to the raid on the liquidity here before price broke down, that would definitely be an area of interest for me. But it kind of lines up very similarly with that. So probably looking at, 40,091, call it 40K flat, into and around 42.8. I would say they're the areas that I'd be looking for price to drive up to, considering the strength that it's showing in the market, right? So hopefully that's helpful, mate. Toppy GG, would love to see analysis on ETH. Okay, nice. Yeah, that is a really good question actually from 2P here, right? So would love to see analysis on ETH. It's not as strong as BTC and also running like alts, wondering what the state of it is. Really, really good question. Let's dive into that, shall we? In fact, we can do this analysis here on ETH. So let's jump onto ETH, grab ourselves a nice clean chart and take a look. So I'm certainly no expert in this, but in terms of how these kind of altcoins and BTC and the low caps and your layer ones and how they all cycle, we've got some amazing resources at the Bird Nest for that you can check out, none less than on our infographics page, which is completely free. You can go to thebirdnest.com/infographics, and there's tons of gems on there, just little advice from traders, professional traders, who all of us do this for a living, right? So this isn't coming from, unknown sources. You've got the head of it, who's Crypto Bird, who's a CMT level 3, chartered market technician. Really, really great people to learn from. So we can see here previously, like we were talking about ETH, right? See how these highs, see this high has swept that. We can see by the upside wick here that we've got that kind of downside pressure, the same way that we had here, same way that we left those equal lows here, the same with this high, right? Now, what we were looking at here was how price reacts, right? So you see when price comes into this area, here's a key low. Why is it a key low? Because look how far it's driven down into here and then had that big bullish reaction. And once again, look, we have a balanced price range here, So for me, that's really, really important. We come down, set this key low, balanced price range, price then moves up, right? So taking external liquidity, price is now moving to internal liquidity, which is this fair value gap. When we close above it here, it looks like a small move, right? But our expectation then is to take price above this high, external. From external liquidity here, we then move to internal liquidity here, which is the fair value gap. From internal to external, which is this high. External back to internal, internal to external. That's what we're looking for until it fails, right? So like with this one here, because we're bearish at this point, another balanced price range for you. But our expectation was once we took out these lows, price would move from external liquidity to internal. Look to rebalance this. And then ultimately our prediction is, because we're holding a bearish bias at this point, for price to then move lower, right? When it doesn't, when this fails, the expectation then shifts to price seeking external liquidity. And we look at these untapped highs here. Once we take external, back to internal. And ultimately our internal is this fair value gap, but also it's scary sometimes how price respects this, right? Look at this inverse fair value gap that becomes a balanced price range. Look at the bodies of those candles sat to the dollar pretty much on that line. That's how you can look at this and see and get that idea of support. Hasta la vista, Barbie. Hello, mate. And Erica, BC, when I'm trying, your words are echoing in my ear. I hope in a good way, mate. I really do. You're always on the stream and asking great questions. Take a little sip of me tea. How are you doing, Hasta la vista, Barbie? Are you well, mate? So, before I ramble, as we all know I love to do, how can we get involved in these strong trends, right? So, there's something which goes back to two people I learned the most from in this industry, which is ICT and Trader SZ, right? Which is looking for two things. If we're trending up, and I'll show you on the day, then I'll show you on the 4 hour, then the 1 hour, the 15 minute, etc. Yeah, sure we can. Right, let's have a look. So just quickly, what we're going to do is we're going to cover this quickly, and then we're going to apply these and take a look at ETH and Sol. All right, going to keep this a little bit punchier today. We've got a lot of prep going on at the moment for Congress, so I want to kind of get our heads into that. but also try and do a live stream that isn't a bloody hour long for you guys to have to watch back or be part of. So we try and cap it at about 45 minutes, which gives us 30 minutes, 15 for me to ramble about this, and then 7.5 minutes each for, for Sol and ETH. All right. So first thing, just while we've got the chart here, the reason these lows are marked up, look what happens when price interacts. When it comes below, look at how price is interacting. Look at that downside wick. That shows you the buyers are stepping in, right? Then they come back down, bought up, price traveling from external back to internal. Then, however, when we reject here and we come back down, that's fine. But look how the candles stick. You get a load of these doji candles, indecisive. Why? Because on the lower time frame, that's just range trades, pinging up and down, liquidity games. Then what happens is, then we get this close below. Yeah? See the body of that closes below. Not overly convincing because it's kind of like a bullish pin bar, right? But ultimately what happens is then price flushes out these lows. Then we're looking for the reaction. It sets this low and has a bullish reaction. So the idea is, well, if this is where the buyers stepped in before, and they stepped in down here, then maybe this is an area that's going to offer support. We take this key low. When price then engages with it here, we see this is the area that gives us our trend reversal, right? And once again, I recommend everybody go, well, not everybody, if you fancy it or not, it's up to you. But if you look at these, start to look at these inverse fair value gaps, yeah? Here, for example, even in these trends, right? This one here should have supported price, but except to the downside. So upside, then we close below, retest, what does it do? Looks for liquidity lower below these equal lows and ultimately below there. So that's actually the rambling over on that one. What I now want to talk about are using prior areas of consolidation, yeah, which is like how SC would look at it, or traders of that kind of ilk, or looking at our order blocks. Yeah, Nit, my man, how are you? And Geo, yes, I'm sure Cuba has slipped off now to work like a soldier, but the infographics are great. Cuba, any chance we get some covering PD arrays? Oh, I think we could if he's still on here. If not, let me just write a note here. So for infographics, PD arrays. Yeah, I think we can do something like that, Geo. No problem, mate. Right, so order blocks or prior areas of consolidation, right? Why are these important? Because these are the areas. Hello, Nip, by the way, our lovely friend Nip Par. So what we're doing here is we're looking for down close candles to support price higher and up close candles to support price lower. Yeah. So let's just look with what we've got on the screen here. Yeah. And then let me just draw them in, right? So the key thing with an order block is you need to be trading above it for it to become valid, right? That's the best way to look at order blocks. So let's pick a random point on the chart. We'll pick here, right? So let's draw a line on that. It was roughly here, wasn't it, right? So what we're doing here is the principle is simple, right? While we're in trend, yeah, price is pushing lower, we're expecting the up close candles, once they're closed below, like this, yeah, to defend price, yeah, so to push price lower. Our order blocks go in blue. So price trades below it here, yeah. Ultimately, we see when it digs into this here, we're expecting that to then send price to external liquidity. Why? Because we've run external liquidity here. Price comes up into internal. Then we come from here, back down, take out external liquidity below this low. So the expectation is to hunt internal. Is there an order block or a fair value gap that aligns with our theory? Yes, this order block, and yes, this fair value gap. But ultimately, what we're doing here is we're looking for these up close candles, yeah, to keep price suppressed lower. We see? So price comes up into this area, drives it lower, leaves this order block here, price drives back up into this area. Or even if you're not looking at it as the order blocks, right, and you're just looking at those candles and that cluster of candles here, this consolidation, right? It's that consolidation here. That's what's driving price lower because that's where the trades are accumulating, right? So as we then sell off, we come back to retest this. We then sell off again, right? Now, the interesting thing here is as we find resistance in here, we come back to a point, price takes out this high, right? So we're looking for price to reach for external. It doesn't quite get there until here. Now, what we have done here is taken this low. So what we look at when we're looking at BTC pumping, awesome. What we look at when we want a high probability order block is one that's engaging with a support and resistance level. Yeah. So that means one that's taken liquidity, in this case from the lows. So when we come in and we sweep these lows out, yeah, we notice that we form this down close candle. So this down close candle here, as we run this across, when we trade above it here, we're expecting this to offer support, and then price moves away, right? Now, ultimately, we're then saying to ourselves, okay, well, when do we do the same thing in the opposite direction? Here, we've run these highs, yeah, these highs and these. Price is breaking down, so we say to ourselves, okay, then quite simply, this up close candle should be supporting price to the downside. So when we close below it, we're looking for a retracement back towards it and a sell-off, okay? Then, as we go down, we're doing the same thing with the other up close candles, right? We are looking for these to reject price. Trades below it here. Yeah, closes here. We look for price to draw back up in line with our model that we want to see price come back up. We've also taken external liquidity. So we expect price to come draw back up into here and sell off, right? Now, when we sell off to here, bearing in mind we're looking at a daily chart at the moment, we have this low, right? So we've come down, engaged with this. This is where we're looking to be short. Price sells back down to here, shows strength by not taking out these lows, but it does ultimately take external liquidity. Our expectation then is for price to draw back to internal liquidity, which would be here. But then we can see we just get this little sneaky close above, right? And this is where it starts to get interesting, right? This is where prior consolidations that should be offering resistance turn to support. So if we now draw that theory higher, right? Down close candles, trade above it here, price comes back in, retests this, moves higher. Actually, let me leave that on there. I know that they're going to look quite a little bit big and possibly kind of garish when we move to the lower time frames, but I want to show you on a few examples, right? This one here. Okay, as we draw that one, and actually this one, down close candle here, actually has a fair value gap after it. Right, see this fair value gap? So for me, with a down close candle or an up close, if it's then followed by a fair value gap, then I allow for both the wicks for a larger trading area. So we're now kind of in the similar situation here. We're just trading above this one now, but let's focus on these last two areas. Because the issue is sometimes that on these time frames, look, we get this big move up, price barely taps into this fair value gap where we would have wanted in an ideal world a deeper retracement, right? But ultimately, price moves away and doesn't wait for us. So we have to have a secondary plan. The market can get these huge injections of bullish news. It can be a Fed announcement, it can be news release, etc., that can cause and catalyze these big inefficient moves, right? So you don't want to necessarily be left behind, but you also don't want to just FOMO in, right? So, that's the last thing you want to do. Actually, we'll look at this on an H4 first of all. So now we're in our kind of H4 bullish area, which is caused by these down close candles on this day. So that means from this day forward, yeah, we're looking for price to dig in and give us some bullish price action. So to signify that, let's just pop a nice green line here quickly, yeah? So price comes up, what are we doing? Now, it depends obviously what time frame you're looking to trade on, but what I would say is that if you're applying the same kind of principles, that price is going from external to internal, internal to external, external back to internal, then you can look at that in a way that you can establish a trend, okay? But ultimately, we're watching this whole area to act as support. And a lot of the time when you look at these order blocks, drawing this in to give you an idea of the equilibrium, yeah? So see the 50% line? See how price is just, might dig into it, but you're just not closing below it, even on a 4-hour scale. So if we now apply the same principles across this, and we say to ourselves, okay, what do we want to see here? We want to see these down close candles support price higher. So what do we have here? We have this down close candles. I draw them down to the wick because there's all three of them are adjoined. So what do we have here? Down close candles, price trades above it. What's our expectation when price digs into it, again, respects the midline of this, is for price to move for higher prices, yeah? What happens? We take external liquidity here. The expectation when we take an external liquidity, which is a untapped high or low, is that price then moves down into internal liquidity, right? Which we see price digs in here, then our expectation is for price to move higher and take out this high. which we can see we do all the way over here. Yeah. But can you see how if we're overlaying these and we're saying to ourselves, okay, this gives us our trade parameters here, we can just simply move this one up to this one now. Move that across. What happened? Price closed above it here. We leave these equal highs. Price draws down beautifully towards our New York session, and we get price take out these highs. So again, we've taken external liquidity here. So our expectation shifts to expecting internal liquidity, right? Price closes above here, remembering at this point we've taken this out. So we're now looking for a retracement down into here. Yeah. So in this area, we're looking to go long again. Now, you know what? You might have come down into this area here and got taken out. Yeah, you might have tried to go long here and not quite had the momentum, but look what the following day gave you with the same principles. Allowed you to catch that massive run up, right? So that's just something I wanted to share with you guys today. And it doesn't matter what kind of time frame you're looking at it on. You can use it to manage trades as well, which I think is a really, really good way of doing so. Again, here we can see, how these balanced price ranges come into play. Ultimately, we set this one lower. Yeah, balanced price range, big breakaway. Price comes back down into this inefficiency after taking external liquidity, comes back to internal, and we get that nice move higher. So remember what we said. We look for these lows to be swept. Yeah, and then we look for the down close candles to support price higher. So see how when we came back into this area, we got a beautiful trade in London. Ultimately, we then set this down close candle here. It's not high probability because I don't think we quite ran that low. We left equal lows there. However, we can see here that we have these three adjoining down close candles, which then supports price higher again. Yeah. In the same vein, we can use these to help us look at reversals. Oh, Gregory, good morning, my friend. Let's have a look. So now, as we're looking at this move here was significant. We took out this high. Yeah. So again, we're saying, okay, we've got our up close candle this time. And we trade below it here, right? So now we're saying, okay, well, ultimately, unless this is violated, we close above it, in which case that's fine. We use that as a base to move higher. Our expectation is for this to then trade down. So we close below it here. What do we then do? We're then moving down to our next up close candle here. Down onto the wick of that and the body of the low side. Once again, we can see price trades below it here, drops, takes external liquidity here, comes back to internal liquidity here, yeah, which is this up close candle here as well that's formed. Ooh, trigger that back onto there, which then again we expect to reject price here, searching out external range liquidity, yeah. Bitcoin quietly going to 40K. Yeah, I mean, Bitcoin's having a really, really nice little rally at the moment. It's really good. We've got a lot of long positions from much lower down on Bitcoin and some alts, thanks to, first of all, our amazing fundamental team and also our macro team, who really take care of that. Obviously we've been in here kind of intraday scalping and bits and pieces, so we get that nice balance to it. But these kind of principles that we're looking at here work across all the time frames. So I think it's a really, really poignant thing to have sometimes when we're looking at that. So I also promised that we'd take a look at Sol, didn't I? So we got 15 minutes now. Let's just take a look at Sol. Now, some of these coins as well, when they run really, really hot, this is when these principles can really help you get involved, right? Now, I'm not saying just jump into these blind, and I'll show you a few low time frame examples of how you can get involved in them as well, how we're using our high time frame, decanting it down to the low time frame, especially with crypto. If we really, really get to a point that we're at a key macro level to buy it, right? And that we expect with crypto, when it really, really starts to run, it can run incredibly hot. Then you have to align that with your risk profile. Once you've seen a large high time frame consolidation, to zoom out a bit for you here. And by that, I mean something like this. Yeah, we can see this large area here. Price kind of runs up and we kind of range a little bit. We're kind of holding in this tight area around here. Then when it pops, look what happens. It can just go absolutely ballistic, right? So if we're using the same principles here, down close candle supporting price, down close candle supporting price, down close candle supporting price. Do you see how these areas just give you that allowance to go in? And then if you're wrong, Yeah, and then, so let's take this one for example. So we have our down close candle here supporting price. We've traded above it. Our expectation is for this to then support price. Well, it doesn't, right? So what does it do? It closes below here, sets this low, comes back to, anyone tell me? I'm taking our external range liquidity here, run down, right? We're looking for internal liquidity here, right? Ultimately, we form this low, price comes back to internal liquidity in the form of this, yeah, and also this fair value gap. So now we look for external. Now we say to ourselves, okay, well, where's price going from here? Right? That's fine. These downside wicks are our first clue. We've run this down. We're taking these. You can see absorption down here. Yeah, you can see buyers stepping in. But that's not really enough, right? We have these down close candles here, so that we would mark them up initially. Then we get this down close candle form here. We trade above it strongly here, right? Now we've taken external, so we're now looking for price to travel to internal, all right? The internal is in the form of this order block. Fair value gap. Can you guys see that all right? Okay, that's slightly darker. So external liquidity taken here in this low. Our expectations for price to draw up to internal liquidity, yeah, before then once again seeking external liquidity. Now, we do have this micro low in here, right, which we can see again with the bodies respecting this. That's the draw, and we do push a little bit lower. But remember our high time frame bias. What are we looking for here? We're looking for these down close candles to support price, right? Now, we came down and swept liquidity, so this makes this a high probability order block, as does the fact we've got a fair value gap after it. That means the first interaction with it, we expect some kind of strong reaction, okay? Now, all we're doing is just applying this across the board, and we can see just as we move forward, right, we trade above this one here, so this acts as support. We trade above this one here, yeah, this area acts as support. We've now obviously got this one here, formed these ones in here as well. We can see how this whole kind of area here acts as a base to support price higher. So just to run down onto a lower time frame for you and just look at how we can get involved in those. So today in London, for example, let's just use my most absolute basic setup, which is called a breaker line setup. It's what I used to use when I first came to the nest, right? So we're just looking for, in one of our sessions, London or the 2 New York sessions, a sweep on liquidity because we expect strength, right? And then all we're looking for from here is the key high that swept the low, becomes our breaker line, right? Why is that? This is the high that's responsible for taking out this low, right? Now, ultimately, it also works like a breaker candle, yeah? So you'd be looking at this being your breaker candle as well, right? Which I do in orange. So it's the same kind of concept, but it's just something that helps simplify it for people rather than looking for really low time frame drops, liquidity, fair value gaps, etc. Oh, Gregory. Oh, mate, that's so kind of you. No, you're very, very welcome. Love being on here with you guys. Same for you, 2PGG, and everybody else. Really feeling the love today. Would you have pulled the trigger at the top of the OB? Okay. So probably I've just front run your question here, haven't I? Ryan, better late than never, mate. That's what they say. And they're all recorded. If you've got any interest in watching them back, mate, you're more than welcome to get in touch with any questions. So here, the breaker line or the top of our breaker candle, that's the up close candle that leads to the drive on liquidity lower. Some people would use this one as well here. For me, I'm looking for a more high volume candle, just showing that it has significance before that purge, right? So for me, this is really the high that's pushed down to sweep the low. We then close above it here. Our limit order goes on here, so the trade setup would look like this. As soon as this candle closes above, yeah, then I place my limit order here, stops below, and then we would zoom out and get ourselves a high time frame target, yeah? So that's what that would look like. So what about the previous day? Same thing, right? Because we should be digging into an order block around here. We can see we've dug into this high time frame OB. We're now coming down, just trading down in this session. We wouldn't have got an entry here, unfortunately, purely because on the 15-minute time frame, we swept liquidity here outside of our trade zone. All right, and this one here had no significant sweep to it either. However, it is really interesting to see that when we're looking at the same concepts and principles on lower time frames, obviously all of these adjoined candles here make a higher time frame order block in themselves, which would obviously be blue. But you can see again how price starts to dig into this area and find support. So let's just look at one more execution example, and then we'll kind of just look at where we could possibly look to get involved in this. So here we are again in our London trading session. So Sol's been a real beauty for London lately. What do we want to see here? Well, we're digging in to our high probability order block. Remember, it was a high probability order block because the original order block, which was taken on the 4-hour chart, was at a support and resistance level. It had taken liquidity from the downside. We had a strong reaction away, leaving a fair value gap, meaning that then when we return to that, and this is the first return, we expect a strong reaction. Now, remember, like I said, you look for these on any time frame, you look for these periods of consolidation, right? And then when you get these strong moves away, quite often it doesn't allow you to get involved. But when you zoom out to the high time frame, you start seeing them really clearly in these periods of accumulation. So what we'd be looking for here in London, and I'm doing this on a 50, I know I trade this on a 5-minute, guys. But I'm doing it on a 15-minute just because a lot of you do get in touch and say, look, we are, struggling with a 5-minute chart, or we don't really have that time, just to show you that we're not cherry picking here as well, that we have swept that low. And then we're looking for this one again. Now, we've got a really high here. So the high that took this low, yeah? If we're using our breaker entry, then our entry would be here. Now, what I would always say to people is don't get too greedy with your stop loss. Just assess. This candle closes here means it would have tagged us in here. Now, for me, my stops still need to be below this low, right? And I'm targeting this higher. So have we got 1.5? Yeah, 1.76. People would be like, yeah, that's not a really great return. Yeah, but if you can do it consistently, it is more than enough to make a very, very comfortable living on, believe me, or to just top the costs up, or to use it to help people, or help yourself, or get your family a slightly better life, right? Don't go chasing the returns. Try and stay away from looking at all these people on Twitter and stuff like that. They're like, look at this big epic return. But some of them out there are amazing, really, really amazing. I'm always happy to recommend people from different fields that are good. But all of those people that have spent years and years just pounding on their craft, right? Just working really, really hard to understand these setups, not trying to chase these massive 100Xs all the time. Just you find out where you belong in this space. So anyway, as we've taken this sweep here, our other opportunity is to look for our displacement leg. Yeah. So see, we have this strong move higher. We leave this fair value gap this time, right? So with that, we can target the FVG as an entry, which we see we get tagged in here. Do this in grey. What I would say is, if you ever plan on testing these methods, right, test the entry methods like one at a time, right? And what I mean by that is you can easily kid yourself that when you look and you've got all this price data, you were like, I wouldn't have taken the breaker entry on this one. I would have definitely taken the fair value gap. Well, okay, then, but why did we take the breaker entry on the other one and not this one? Yeah. For me, I favour the fair value gap entry. I always have, unless there's one that isn't particularly clear and obvious, or this move is efficient. If that's the case, I normally want to see displacement in this leg anyway. If it runs particularly hot, one of my preferred methods, especially with crypto, is the breaker, yeah, or this breaker line. They obviously, more often than not, really align with one another. So, just to really cap the stream off, guys, let's just take a look at where we are at the moment, and just say to ourselves, okay, BC, this is all fucking great, mate, but how the hell can I get involved in this now? I really want to FOMO in aggressively, and I know that I shouldn't, but every fibre of my being is telling me I need to do it. First of all, don't. Yeah. Just know your key levels. Yeah, so really, really zoom out like we've done here. Look, there's loads of up movement here. What I really love about this is this hugely inefficient move down. We've never come back to any of these fair value gaps. You've got this huge order block up in here, took liquidity, flew price down below here. And then we've basically just been in this accumulation. And really, when we're looking at this, guys, this really is just kind of a giant ball of accumulation. Yeah. Prices come down the stage, accumulated, dropped further, accumulated, dropped further. Small accumulation here, right? The other thing I love is this huge kind of BPR that just swallowed everything. Right? So we've had that breakout now. We've come to here. A lot of people kind of waiting for this retest. One thing I would say when I'm looking at Sol here is I'd be showing a bit of caution at this level as we draw this across. For me, I think this is a long way away from the time to go long. I could be wrong. But it's happened before. It will definitely happen again. But as I said with this one here, right? See how we got this weekly close above this key high? Yeah, just showed us a little bit of strength. So then when we kind of decant down through the time frames, we move to our daily, we can then look if price is consolidating above. Yeah. So see how we get these See how we get the order block in here? And remember, like we said before, so now we've got a weekly close and a daily close above a key level, right? We then set this order block, which allows us an area to target to look for long setups in here on the lower time frame. Even if you're going and you're looking at trading on something like an hourly, right? Just make sure that you're consistent with your setups. We've set our daily order block in here, right? Price moves away, comes into it. Basically, you should be saying to yourself at this point, right, if I'm long bias, then every day, what am I looking for? Well, I'm looking for price to drive in and take a low before it moves higher. Drive in, does it take a low before it moves higher? In here, we take out this low. Yeah, we drive into this order block. This, for me, here was the high probability area that we can move higher. And ultimately, look what happens. We get this really tight consolidation in here Monday. Price pops, takes out this high, comes back down to wipe out any people that were late to long this on the lower time frames. Yeah. And then we've got involved and we've got all of this move up. All right, just by having our high time frame view. So with Sol at the moment, I'd just like to see the same kind of thing, really. If we go back to our weekly, on a weekly scale, I think there's loads of liquidity up here we can take. I think when we had these huge moves up, do they have to be retraced? Absolutely not. Would I like to see one? Yeah, I'd love to see us come back down into this kind of region to potentially load up some more. But what I'd be looking for ultimately is for this candle to finish. Do this in green to show that it's bullish so that we get a close above. And on the daily, this is going to look quite ridiculous, but we get the close above that level here. Yeah. And then on the daily, I would love to see a little bit similar to this, like a couple of these form in here, which would be our bearish order blocks. Sorry, bearish candles, bullish order blocks. And then we use this here as our base. And then we use this to then target moves higher. So we would look for this to hold. Yeah, we look for a breakout of that, a little retest, a little kind of sweep, break above. We use this base here, and that's where, I can draw straight lines anymore on this thing, but that's where we would be buyers, yeah? So we set this base, we use the dig into this area here, we look for our sweep, we look for that impulse move higher, and that allows us to get back involved in the trend when they're running particularly hot. And you know what? Don't be afraid of being wrong, yeah? Because let's say you get into that trade here, yeah? And then price does something like this to you, runs up, comes back down this level and starts to get involved down here. Fine, you've been stopped out, but guess what? You've got a really good indication that there's weakness there. Yeah. So we expect strength. We don't hold the strength. We break down. Chances are price needs to cool off a little bit lower as well. All right, guys. Managed to keep this one to 44 minutes, I believe, today, which was really cool. Hopefully a little bit easier for you guys to digest. I really wanted to cover that off to finish the stream. I know we really kind of focus on education. We've been looking at our trade setups. Basically, yeah, I mean, look, the other trades that we went over is not to gloat or look at it, but as a team, we looked at this and we said to ourselves, okay, well, what were we looking for? Intraday corrective moves lower in the early sessions, which we played those short trades on Anchor, on Algo, on BNB, just catching those nice corrective moves lower on the lower time frame. But what was our ultimate goal? We were trading it lower because our belief was that price was pulling back to find support in those areas we'd highlighted. Some were fair value gaps, some were order blocks, so that we were then looking to load up to get back in line with the trend, yeah, and then just absolutely stream and fly to the moon. All right. You're very, very welcome, guys. I hope you enjoyed the slightly shorter format. Seems funny saying that at a 45-minute stream. Stream Doctor, my man, good to see you. Late again. Yeah, it should all be recorded, my friend. Obviously, if there's anything that stands out or any other questions, do get in touch. We've got our free trade congress coming out next week, and I'm so stoked about this. It's going to start on the 15th. Run through to the 21st. Please take a look on the TBN, that's the Burb Nest Twitter account. You can find all the information in the description below on YouTube. I think just to kick it off, there's like $700 in BTC giveaways. There's tons of free stuff, prize giveaways. There's going to be loads and loads of speakers. They're all going to get announced, so I can't give you too many, but a little sneak peek for you. There are some of the best names in the industry. We always try and get together. There's panel shows, there's roundtable events, there's people talking about the future of AI. There's people on there who've worked with Bloomberg, everything. It really, really is good. Yeah, there you go, Gregory. It is indeed. It's called our Free Trade Congress, and it should be available in the description below on the YouTube stream. Or you can find it on CryptoBurb's Twitter account, my Twitter account. You can pre-register for it. I think we've got a few thousand people already just on pre-registration. yeah, there's going to be loads more announcements coming out about it. So I'm super, super excited, guys. Look, have a fantastic week ahead. I'm going to take a little bit of downtime over this weekend to just refresh myself. We've got a big couple of weeks coming up with Congress. And yeah, it's been a real pleasure doing this live. We're going to try and build this in and start doing some live trading sessions with you guys over Congress and certainly afterwards as well. Please do reach out if you've got any questions, guys. You can find me on Twitter. Could you? Yes, mate. Yeah. So there is. So quick question: is there a paid group that gives calls? There is, and actually you can access it for free as well if you just use. We've got like links through with Bybits and Dexes and stuff like that as well. And as a sign up bonus, you can get the calls. You can get the calls for free straight into your. I mean, I think we had a 68% win rate last month, which if you had $1,000, would have got you like close to $700 return on that money. All right, we actually post and print all of these every month as well, with all the statistics, all the calls made across legacy crypto markets, etc. But at the same time, we also post all the information that goes into the call. But what I would do, Ryan, is I would just take the free sign up, mate. Get involved in Congress, and for Congress, if you sign up, you get access to all of our paid membership services for free for the whole of Congress. Come in, see if you like it, engage with the community, and have a blast. All right, guys, it's been lovely being here with you all again. Have a fantastic week ahead. Do trade safe and have an amazing weekend, and let's absolutely smash it ready for Congress next week. Take care, guys.